the next set of Soonicorns and unicorns, and that's what our investors are going to discuss with us today. So before I ask you the questions where they would be coming from, though of course we can't see unicorns, so I'll quickly ask you to quickly introduce yourself for 30 seconds each, and then we'll begin the Q&A.
So my name is Puneet. I've been doing what I do for the last 15 odd years. Seen multiple cycles, companies from a very early stage right up to IPO. Have been fortunate to be a part of at least 6 of them. We're, just as background, sorry, I should have told you what I do. I'm part of Ulterior Capital. We are a venture credit fund. We've got about 5,000 crores of AUM, 200 portfolio companies, sector agnostic.
Thanks. This is Bhushan. So I'm representing Multiply Ventures. It's a first fund for all of us, 3 partners. We focus on fintech, consumer, and consumer tech. Did about 25 deals so far from the fund. We focus primarily on 0 to Series A stages, come in very early into the deals. Most of the partners have operating backgrounds. We have built companies for about 25 years. Be it Myntra, one of the partner was co-founder at Myntra. I was part of the early team at Paytm. I built from 20 million to 300 million kind of consumer base. Was part of Alibaba in China before. Was at Yahoo before. So lots of experiences from of building companies or scaling existing companies globally. And that's what we're trying to replicate into our fund journey, helping founders and building businesses for India.
So Bhushan, I'll first start with you because like you mentioned, while partnering with founders, you're also mentoring them. So, what are the lenses which you use to look at the next growth stage of founders?
I think the landscape in India is changing, definitely, right? I think, and just to take my example, like way back in 2000, we built products on CDs, then changed to desktop internet, now in mobile internet. So almost like 4 or 5 different transitions of what we built and whom we built for, right? Same thing is happening, I think, much faster pace for companies in India. When we started, e-commerce was the play. Today, quick commerce is a play, right? When we had a SaaS was a play, now there is AI is a play. So what's happening in the landscape of the platforms on which companies are getting built is changing. So even we as fund managers have to constantly learn and evolve our learning, and how do we help the founders. So that's one on our side. Second thing is the time to build companies from 0 to 1 journey or 0 to 6 or 5, 7, 8, whatever stages you think is also becoming much shorter. So in fact, there's interesting statistics. It took maybe 20, 30 years to build unicorns, maybe around year 2000. It went to 10 years, now it's about 6 to 7 years, even in country like India. So the couple of things which becomes important for us is how do we build fast-paced companies from 0 to at a scale. Second is being relevant as ourselves as investors. And the good money should chase better growth, right? So that's another thing, right? Can our every dollar which we invest is following kind of a great stories in the market, right? So that's a 3-prong approach, selecting the market, learning from our own experiences and then working with founders. And third one is building, making sure that dollar is giving ROI in every point of view. That's maybe 3-prong, I would say.
So, Puneet, we know that VC capital is short in supply, and the way investment is not booming as such, that too in late stage. So how are you looking at your investments currently?
Yeah, so I think, at the very core of it, it's a misconception that our money will be available when there is no equity. It's a misconception, media guys love it, they talk about it, great. But, we never put the cart ahead of the horse, right? We are complementing equity capital. We don't substitute it. We don't advocate people to substitute it unless you are profitable and have cash flows, of course. But the reason why we don't do that is because you will very soon end up in a situation where the leverage will become a noose around your neck. And it's a very fine balance that you have to be very mindful of. And hence you have to stick to the discipline, and we've tried to stick to that for the last 15 years of doing this, that we just complement it, we optimize the capital structure, we solve for cost of capital, and we keep it at that. There are so many companies you see, I'm not going to name companies, but they've all gone down because they've just taken a lot of leverage because it's available. So I think it's our duty as well as fund managers and people who are responsible for other people's money to make sure that whenever we are putting money to work, it's for the right reason, we don't over leverage a company, and we complement an equity raise.
Okay. So when you are investing the debt amount, I mean, do you typically do it in partnership with equity investors?
Yes, we do it in partnership, but it's not like we are hand in glove. We make our own assessment because our view is going to be for the next 3 years. Okay. His view is going to be probably for the next 10 years. So we will have a difference of opinion, which is good to have. The way we see it is we try to put certain checks and balances where companies can get disciplined with the money that we give. I think that's very important because it's a startup. It's a startup. It is challenging conventional wisdom. It is going to do things which are otherwise not done, and hence there will not be data points to prove that. So what we just try and do is, yes, we do partner with folks like him and other people in the ecosystem, but it's not that we're hand in glove. We will make our own assessment. And we use it based on data. I'll give you an example. If you look at it 7 years back, if you're a consumer brand, you're doing 1 crore a month or 1.5 crore a month of revenue. Great. Wow. Today you're doing that. Oh, okay. For a SaaS company, 1 million ARR was considered to be great for PMF. Now it's probably 2 or 3. So we keep these data points in check, which we've accumulated over the last 15 years. And we try and assess companies as to where they fit. And if it's a company that sits heavily out of the money, based on its last round, and that happened in 2021, today those companies are not attractive for people like us because they will find it very difficult to raise the next round.
So the previous set of unicorns came from consumer space, it came from EV, it came from fintech. So when we think about the next set of Soonicorns and unicorns from 2025 to 2030, I mean, which are the sectors you think are really buzzing and, we'll have bigger companies there?
Well, as long as it's from our portfolio, I don't care. But I think, look, it's very hard to say. Because a lot of this tends to, like today it's quick commerce, flavor of the season, everything is going great. I just met like 3 companies this morning which are all into quick commerce, vertical plus horizontal, and I thought quick commerce was done. But guess what? You got like super smart guys coming out now with these models. But to answer your question specifically as to where we see the next level of unicorns happening, financial services I think will continue. It's an evergreen sector. Because it can absorb a lot of capital. It's a very, very big market which banks are not touching for different reasons. And hence that will continue. I wish to see a consumer brand become a unicorn and sustain at being a unicorn. I think that's my wish. But the first one I think is imperative to happen.
Okay, Bhushan?
Yeah, I think maybe I'll answer this in 3 parts. One, where India is today and the new set of consumers, I think we are seeing a shift, right? Let's say Flipkart, Mintras of the world are getting molded into quick commerce, right? So what is going to happen is like this old wine in new bottle kind of models, right? So there is a huge opportunity of that happening, whether it's AI in a tech world, whether it's quick commerce in commerce, or hyper-local versus national deliveries, right? So earlier we had national delivery players, now there are hyper-local delivery players, right? So I think this one big bucket which is available for entrepreneurs to build companies. Second big bucket, I think what he said, there are large greenfield opportunities, whether it's fintech is one thing, cross-border we feel is very interesting. Both, I think, entrepreneurs, one is opportunities which are out there as greenfield, but given government support is going to be available for that, right? I think that's second one. Third one, which you also feel is this entire opportunity which comes up from this, maybe I think India 2, India 3 onwards, is a huge kind of a young population first time on internet using basic kind of content consumptions, right? So they would look products at a very different, internet service at a very different kind of a place. And that's where there are players like Pratilipi and some of these content creation plays are showing some signs. So I think the content consumption for India 3 onwards is going to have very interesting opportunities, whether it's content or gaming or entertainment, because that's the first India consumes on internet, right? So I think that's third bucket. And the last one I would say it's what we called as new formats, right? India-led innovations. Because first 2 might have like existing India innovation in different format. I'm going to look at greenfield opportunity. Third one is almost going to be completely for India, right? Like for example, Zomato, those kind of plays failed in global markets, but India is working very differently. They are innovating certain new things, like can Zomato become an entertainment kind of a service provider? So what is happening right now is the third bucket where India-led innovations are going to happen. Yet to see a lot more things to come up there, but I do feel like there is opportunity in terms of financial services is definitely mentioned, because credit gap is huge and still most of the credit is not reached to smallest the part of India. So there are a few pockets from India 2 to bottom, which are going to be very large, with 5 to 10,000 crore opportunities next 5 to 10 year size.
Okay. And I mean, any particular sectors you think that, okay, they're still in the bubble and have got very, very high valuation? You think that, okay, these are not the sectors wherein we would want more Soonicorns or unicorns happening?
Tough to say. I'm trying to think of companies which are not in our portfolio and then sectors.
He's putting a Venn diagram to that.
But no, I think look, it's really hard to say which sectors are in bubble, because there will be one sector. In that same sector, there'll be a company which is living in a bubble and one which is not. So it's hard to really pinpoint a sector. But if you put a gun to my head, I'll probably go with consumer brands. Yeah, I think their multiples are way too high compared to what it should be. But yeah, I think I'll go with that if you put a gun to my head.
Okay, Bhushan?
So for me, I think again, maybe I'll echo the same thoughts what he has. There's, in a way, we don't see many bubbles, at least in India, as we see. But if I extend that question from a crowded space, right? It's like India is more of a Me Too play, right? If one guy does lending, there are so many lending plays, right? So I think there's a bubble of creating companies that I want to create lending company, I'll go behind lending. Somebody says, yeah, hundreds of people are building, yeah, they might have a really great idea to back it, or it's not a 5,000 crore output there, right? They might be building for 5-10 million value, right? Not really looking for large one. So there's, I think, bubble or a crowd or herd mentality, if I had to say so. And then the stack ranking in that herd, right? Who is the best guy who possibly lives through, and then rest gets down, right?
Okay. So I hope both of you are refraining from that herd mentality, which we typically see in the VC space.
I hope so, but we'll know over time. But yeah, I think for us it's a little different. Look, we try and index the ecosystem in a way. Yeah. That's us, right? And we have companies that we, even after we invest and they pick great momentum, and they get carried away sometimes when they have offers at much higher prices, at maybe an obnoxious price. There is 2 companies in our portfolio right now which are raising rounds at a berserk price. I think that, and in fact, I'll give you an example. I'll give you an example of this company that we had put some money in. It was a Series A company in the healthcare space, consumer brand again. And they raised their first round of capital at 1.5 crore a month revenue at 70 million valuation, 70. And they had 6 offers at that. So obviously founders wanted to optimize, went with the highest bidder. Fast forward, 6 months later, the company had to return money back to its shareholders. Why? But the company died the day it took a price of 70 million, honestly. 6 months later was post-mortem, but that's what happens. Thankfully we got our money back. Investors got a lot of their money back. But yeah, that does happen.
So what kind of lenses have you developed over the years to ensure, you're investing in the right companies, partnering with the right founders?
I think what happens is, I'll take that, right? There is a, when you meet a founder and given the amount of time that we spend doing what we do, uh, probably in 30 to 45 minutes, and I'm very sure it's the case for him as well, you will come to know कि यार the guy is a winner or no. वो पता चल ही जाता है. You do come to know. There was Ritesh Agarwal who had the same vibe. There was Adit who gave us the same vibe. And a lot of such people, you just know that approach, the way they communicate about what they want to build is clear in the first 30 minutes. Uske baad is then just paperwork. You really come to know that. I don't know if there is a very, there's a typecast way to say, you do this and you'll appear that way. It just comes out from inside. You can't really fake it. And then many times, you have that smell test. If some guy is doing a lot of BS, वो भी पता चल जाता है. तो थोड़ा experience, getting grey hair, तो some merit to that.
Okay. Bhushan?
Yeah, so for us, I think the things are a little different. Because I'm sure that he doesn't lend day zero company, right? So he has something to see, whereas we do kind of get into day zero companies where there's a lot more riding on founder. And so I think the lens, if you have to use or kind of enumerate here, is definitely founder, right? Founder definitely means a lot. Idea definitely does have much lesser value when you start. And the founder's ability to build business and how inclined or what is his kind of a desire, passion, commitment to build something, right? Sometimes we also use a lens that how much the founder has to lose, right? If let's say a guy comes from very kind of a high pedigree, kind of a high job level, he's not going to chicken out, raise $500,000 and then just not do anything, right? Because a lot more riding, right? And he's giving, when he says, I'm going to give 3-4 years to figure it out, he will give 3-4 years. Whereas a far younger founder, when he says 3-4 years, you might count it as, let's say, 6 months, right? With $500,000. So I think that's one thing. Second one is also the way our lenses are not at the time of only investing. A lot of lenses actually come for us between the 0 to maybe 6 months, 9 months and 2 years kind of a buckets, right? Where what is he doing, right? While money is gone, we cannot just leave it, right? We have to watch where is getting spent, right? So those lenses, I think the post-investment, we have a lot more eyes and lenses in terms of how the business is shaping up, what kind of metrics, because a lot of times the metrics which we start with at idea stage at first when he launches the company and then maybe a year down the line completely changes. So I think that's where lens, for us the lenses is a constant play, right? It's not just one time just to put money, but eventually at least a good 1 to 2 years journey. After that, then the process takes over.
I'll give you a very quick story about a founder called Rajesh Yabaji. He runs a company called Zinka Logistics or Blackbuck. It's listed now on the stock exchange. It was day zero actually when I met him. It was only him and his executive assistant in office, nobody else. And he was wanting to build an intercity logistics business. Intercity is basically moving a truck from one state to another state. And intracity is within the state. Now at that point in time, I think somewhere around 2015, there were about 10 startups that all got funded in the intracity space. And he was building something intercity. And I was, I went into that blinker mode, intracity. And the way he broke down the market at that point in time, and he said, if I do intracity, I have a lot of offers. And in his pitch to one of his first investors, he had made 9 slides on intracity, and the 10th slide was on intercity. So his investor asked him, why is intercity only 1 slide, and why have you even put it? So he said, yaar, VCs want to see this, so maine dal diya. But my heart is in intercity. And his investor was, I think, one of the great investors. Told him, go build intercity, and we'll support you. But my point is that when he broke down the market between inter and intra, it told you that the guy is thinking right. And actually, that turned out to be correct. Because a lot of intracity guys had their different phases of life, including death. But he kind of got a listed company.
Okay, interesting. I also want to ask you, I meet a lot of investors and typically they have this, clarity that in terms of qualification also, they would typically want to invest in an IITN only. So is that approach right? I mean, what's your take on that?
वो तो सर ही बताएंगे. D0.
Uh, so I think there's no bias, frankly, for it. And I'm saying being an IITian. But what happens is the alumni network, right? So it naturally feels like IITians are chasing IITians, right?
Yeah.
It's just that alumni network, at least my assumption, right? Most of the IITians fairly easy in the network to find VCs.
Yeah.
For example, we have this IITB VCs group. There are 112 people in Bangalore.
Okay.
So it's almost every VC firm is covered, right? So I'm just saying that it's just most natural of that alumni access. And somehow people help each other. And same thing, I did my master's in IIT, my BTech in other college. My BTech doesn't have that kind of a group. So if I have a friend from that school, while he's a successful entrepreneur today, many of them in US, they didn't have that access. So it's more of an access issue rather than I think anything else.
I think, if I had to take a stab at that question, I'm not an engineer. I'm commerce. वो भी bachelor's in commerce. No reason to say kya kaisa, but and I know how commerce graduates are because I myself am one, and then I've met so many IIT guys. I've been so fortunate to really be around them, and I'll tell you the difference I see. The difference that I see is that people from an engineering background, I'm not saying necessarily IITs, but largely IITs, their power to think logically and their power to think logically very fast and not cap out is way higher than somebody else. And that is not because it was an IIT stamp, it's just that because their rigor, academic rigor, has been so intense that it's become their second nature. It's become their muscle memory. So that's how they just approach life. I think that's the difference.
Okay. So on that note, we open the floor for questions. In case you have any questions for our speakers, please raise your hand, identify yourself. Okay, I think our audience has got enough gyan for the day.
Yeah.
I think it's
I think we
already
explained
late.
everything very well.
That just makes our job much easier. So before we conclude, any remarks from you that these are the new age sectors, wherein funding will be available, or will it be available in early stage or late stage?
Yeah, at least for us and most of the seed early stage investors, I think AI is definitely which we are looking at. Have not found any great kind of subsectors, but AI in general is an interesting play as far as investments are waiting to happen. Second, it's quick commerce. I think he did touch upon. I think there are a lot more vertical quick commerce companies are coming up right now. Fashion, food, 10 minutes food, and that kind of thing. There is, I think, interesting space. And a third way thing is more, I think, where I am seeing right now is, while it is not our sector, is aviation and defense. Because there are interesting, very large opportunities available right now. And if I look at the size of opportunity versus the number of startups in that space, very under-indexed.
I'm going to take a little bit of a counter view here, and I'm going to kind of talk about if I have to put my angel money, what am I looking for? I'm looking for something in travel because I think it's an opportunity which beyond the MMTs and all of the world, there is a big white space which is left, and I would probably think, I like to say luxury travel, just it sounds good, but something more which is personalized. I know there were a few companies in the past that have tried to do it, and they've done well. Though not from an investor perspective, but from a cash flow perspective, they've done very well. So for me, I think it is travel. There's a lot of stuff to be done in travel. So I think I'm excited about that.
Okay, so on that note, we would like to conclude the session, and I hope your journey continues of finding the new Soonicorns and unicorns, though we know the unicorns don't exist in the real world.
Hopefully. Thank you.